Mr. Ratner, thank you, and I want to thank again all the witnesses that are here today, and certainly do appreciate your time and effort to be here. And I think we've just defined, with the 4 witnesses in front of us, the difference between what we perceive as fairness. And I think that's probably the first question we ought to talk about, a little bit of what is fairness. I think all of us, for the most part, can agree that our current tax code is too costly, too complex. And something needs to change. It's creating unnecessary challenges for families across America, whether they're Nevadans or others, and especially for small businesses. So I commend the chairman of this committee for his efforts to examine fundamental tax reform. Question is fundamental tax reform, how are you going to make it fair? And as co-chair of one of the tax reform working groups, I look forward to working with my colleague, Senator Bennett, and others on the committee so that we can create a tax code that frankly is simpler, that is fair, and that will work to grow the American businesses. So I want to go across the panel, starting with you, Dr. Lindsay. Would you repeat, in your mind, what a fair tax code is?
Sure. I think that a fair tax code...
Could you hit your button, please?
Oh, sorry. I think a fair tax code is one that I disagree with my colleague to my left here. I have no problem with modest progressivity, but I think fairness also has to balance the relationship between the state and the individual. It was interesting that Dr. Boucher used the word optimal, which is often associated with revenue maximizing. I remember when I wrote my thesis, the first page of my thesis was about that concept, because Jude Winiski, who's on the opposite side of the spectrum, similarly said optimal was revenue maximizing. There's no such thing, because as you approach the revenue maximizing level, the excess burden you're imposing on the private sector rises very dramatically, and the revenue, marginal revenue collected by the state, goes down substantially. So at the revenue maximizing rate, what you actually get is an infinite preference for money going to the state over money going to the individual. I don't think anyone thinks that's optimal. I mean, maybe Stalin did, but it's not optimal. It's just not optimal. What we need to keep in mind is that we are a society where the government works for the individuals and not vice versa. And so when you start to take, people have to work, not only work Monday and Tuesday like I do to pay my income taxes, but they also have to work Wednesday and now Thursday to pay their income taxes. I don't think that's fair. At the same time, though, I favor progressivity. My recommendation, which, of course, like all economists is in my book, is I think we have to move away from income-based taxation, because I think defining income is part of the problem. As they say on Wall Street, cash is a fact, income is an opinion. I think we have to move away from opinions, and we have to move toward cash-based taxation, and I think accomplishing it with a two-tier cash flow-based tax paid only by the business. We could get rid of the corporate income tax, the personal income tax, and the payroll tax, and have a fairer and more pro-growth tax system. Thank you.
Dr. Lindsay, thank you. Mr. Murdoch.
Yeah, my view on this is that the income tax rate should be very low, and it should be consistent across the board. I favor a 10% flat tax. My rough calculations are that if everyone paid in, the amount of revenue generated by a 10% flat tax would be approximately what we get now with our very elaborate and confusing system that no one really understands. I fear that once you start adding additional rates and then working, of course, with deductions, loopholes, and so on, you're right back to the situation we have now, where the government essentially uses the tax code as a blunt instrument for social engineering. If you have so many children, you get this kind of a benefit. If you're married, you get this. If you're single, you get the other. If you live in an apartment like I do, there's no mortgage deduction. If I go buy a house, then I get a mortgage deduction. So unfortunately, the tax code, I think, is used essentially as a way of getting people to behave in the way government wishes them to, rather than as an instrument for raising a modest amount of money, or a money at a modest rate to pay for what is required under the U.S. Constitution. So again, I think a 10% flat tax across the board paid by all American adults would be the way we should go.
I think that's the right question to ask. What is a fair tax code? I think there are three answers. First, we need to be thinking about what kind of revenue we need to be making the investments that we need to grow our economy and to make sure that we have shared prosperity. So we need a tax system that provides sufficient revenue for our national priorities. Second, we live in a country that has seen rampant and extremely high economic inequality in terms of incomes and in terms of wealth. This has not happened in other developed countries and is and there's evidence that this is related to the way that we have constructed our tax system. We need to consider very seriously the question of whether or not that inequality is good for our entire economy and our society as a whole. And if we think that the tax system and the way that it is structured is actually promoting unproductive activities and rent-seeking rather than productive activities that are benefiting the competitiveness of our economy, that is a question that we need to focus on in understanding what tax fairness is. It's not just about who gets what, it's about how we are creating the right incentives to have the most competitive U.S. economy. And I think that, unfortunately, the weight of the empirical, serious economic evidence is that our system right now is not promoting the kinds of productive investments that we want to be having.
Let me say two things. First, I think you have to, as I think Dr. Boucher did, you need to separate the question into two parts. The first question is, what is an adequate level of revenue for the United States government to be able to function? And as I said in my opening remarks, we're down around 17.5% at the moment, which is the low end of a historic band of roughly 17 to 19% that we've been in the fullness of time. And given the entitlements burdens that we are facing, that I don't believe there's any political will to significantly reduce as the baby boomers such as myself begin to retire, I think that revenue target is going to inevitably have to move up in order to maintain some fiscal prudence. So we not only need every bit of revenue we're getting now, we need somewhat more revenue than what we're getting now. And so the second question is then who should pay it? And I think that my personal view is that the basic structure of having a progressive income tax, ideally with fewer brackets, and certainly with major changes in loopholes, exemptions, and things like that, that basic structure, I think, has served us well for over 100 years and is one that we should maintain. As I said in my opening remarks, a scenario in which capital income, as valuable as it is to this economy, is taxed in such a way that you have people like Warren Buffett having a lower tax rate than their secretary seems to me to be patently unfair. I can think of no way, and nor can he for that matter, to justify that. So I think that as we move toward a simplified structure, we get rid of a lot of the exemptions and loopholes that I went through in my opening statement. I won't repeat them now, and create, I think, a fairer tax code that way without major surgery in terms of the basic concept of progressivity and having a limited number of tax brackets along the way.
Mr. Ratner, thank you. My time's up. Ranking member.